Hey, welcome everybody to our week number 6 of Blockchain in Aviation. And I continue to bring ideas and strategies and tactics to you on how blockchain is being used in aviation. But today's episode, I think, is particularly special because what we're doing is we're focusing on how do we bring tokenization of equity and capital into markets. And you might say, well, what's the importance of that? Well, a very large number of the followers that we have of this broadcast are actually business owners, and people are constantly coming to me. One of the aspects of our business is we help people to raise equity and capital. And I met this company, I think about a year and a half ago, and they're in the business of using the blockchain and tokenization, as well as other things, to bring equity and liquidity and capital into these markets. And so it's going to be a really interesting discussion. That's today. And then Wednesday, we have a conversation about technology in the industry, where we're going to have a guest from Cranfield University who's going to come, and we're going to talk about uncrewed traffic management and air traffic management. And then Friday is another special interest of mine, where we're going to talk about NFTs and jets, bringing private jets, to you, to the average person who's involved in cryptocurrency. But hey, let's talk a minute about the company that's coming in. It's called Securitize. And Securitize is a company which basically helps you to be able to raise equity and capital. And let me just give a quick little introduction of who our guest is today. It's Jamie Finn, and Jamie Finn is the co-founder and president of Securitize. He has a background in business development and in innovation, and he's worked for large companies like AT&T and Telefonica and quite a few others. But let me go ahead and just bring him right in, and I'll introduce him to you, and we'll jump right into the conversation. Hey, Jamie. Good morning. How are you, sir?
Absolutely wonderful here.
Very good, very good. Hey, our people always like to know where people are located. Where are you located today, Jamie?
So today I find myself in San Juan, Puerto Rico, but spent a lot of time in San Francisco as well.
Fantastic. Really good. Hey, Jamie, just to kick us off here, could you just tell everybody just who you are and what do you do?
Yeah, sure. So Jamie Finn, president, co-founder of Securitize. Thank you for that nice intro. In essence, we are a firm that helps people tokenize. And I got into this space because I was learning about crypto and tokens and how it all worked. And I became super interested in that whole economy. But I found that kind of what was going on in the space wasn't exactly how we thought it should work. And so we created Securitize on the back of that in order to be able to really take advantage of tokenization and the benefits that it has for real companies.
Yeah, Jamie, Jamie and I met, I think earlier this year, I think is what it was. And we were looking at the possibility of raising, I think at the time it was about $80 million worth of equity. And we were looking for creative alternatives on how to do that. And I reached out to Jamie, and he was very kind and helpful, and helped us to understand, what they do and what the process is. And so, we're going to be talking about what they do and what the industry is doing and how they're really helping the industry. But before we do that, I always like to tell everybody, could you help us out on this broadcast, and could you share this stream? And it's always a big help because we want people to know about how to be successful in the industry, and sharing the stream helps us out. And then also all of you watching out there, I see we have a lot of people watching out there, and we have people watching from all around the world. Jamie, I think every time I do a broadcast, we have people in 10, 15, 20 countries all around the world watching. And I always like to know where people are located, and I have some faithful followers. And so, if you guys would just in the comment box, just, give me a shout out and let me know where you're located, and we can know kind of who's watching from where. And, I already got people that are starting to come in and tell me where they're located. And Sudashan, I think I remember he's in India, and, and so we really have people all over the world that are joining. And in a minute, we'll recognize a few more. I like to do that because it creates some engagement. And here's my business partner, Larry, who's watching from Seattle. So just north of your home office there in San Francisco, I guess, so, and we get a lot of people from all over the place. So, hey, just keep putting your name and where you're located, and I'll give you a shout out, kind of as we move forward. Jamie, you gave us a quick little intro of what you do. And would you just tell us just briefly, a little bit about your background and sort of, where you came from and how you came to do what you're doing today?
Yeah, absolutely. I had the opportunity to go to business school out on the East Coast. So I spent a few years out there in Boston. I graduated from Babson. And then from there, I essentially started a small business myself doing web development. merged it into another company, and kind of was off to the races in technology there. Throughout my career, I've worked in New York City, in Las Vegas, in Stockholm, in London, and in San Francisco. So I've worked and lived a number of different places. I've participated in probably, I don't know, well over $1 billion worth of M&A transactions, and predominantly have worked in the kind of space of bridging pure technology with business and making it so that people can understand and take advantage of the technology in a way that it's easy to digest and easy to understand.
Yeah, we always find ourselves in a position where companies, can't grow unless they have the ability to be able to financially make it through that. And so that's why I'm so excited about this conversation today, because you guys are really, bringing a valuable opportunity to people to be able to help grow their business. Hey, let me just recognize a few other people. We have, I can't pronounce your name, I'm sorry, but we have a visitor from Qatar. Thanks for joining today. I really appreciate you being here. And then we have another visitor from Johannesburg. So we've hit the Middle East, and we've hit South Africa, and we've hit India. And so we've hit 3 or 4 different hemispheres here so far. We have a visitor, Kamal, coming to us from Dubai. Thanks for jumping in and joining. Dubai is a really big financial center. I spent a lot of time traveling there. And have you ever done any business in Dubai, Jamie?
I haven't done any business there yet. We've spoken to a lot of firms there that are interested in kind of tokenization and how it might help their business. So we've definitely done a lot of talking there. My co-founders actually spent quite a number of years. Carlos Domingo spent a couple, like 7 years, I think, in Dubai, working for some of the large telcos. So it's an area we know well as a firm, but I don't personally.
Yeah, it seems like in different parts of the world, that people are more receptive, or not more receptive. Certain parts of the world are growing faster when we're looking at tokenization and crypto, and Singapore and the Middle East and Latin America, different things like that. It seems like there's certain areas that are growing, don't you think, more than others?
Yeah, I mean, for us in particular, Japan has been a wonderful market. We've been operating there for 3 years, and we've had a number of really successful offerings recently in kind of the debt space, which were 20, 30 times oversubscribed, which is really exciting.
Wow.
Stuff. So
yeah. And then I have a guest next week who's the founder of SkyThread, and they're in Southern California. And so Jean-Marc's also on that team, and he's been following us. I appreciate that. And then sometimes the names don't come across. I'm really sorry. It looks like we have somebody who's joined from Spain. And, so Jamie, you can see we got a really nice audience watching us from all over the place. So I'm sure people want to hear about this conversation. So let's go ahead and just jump in. Hey, let's start out by, I just want to ask you is that, what are some of the challenges that you're seeing in the industry today that are really obstacles from, small businesses or big businesses from growing today?
Well, I mean, I think the number one and most difficult thing, even big or small, is access to capital at reasonable rates, right? So if you need money to grow your business, there's only a few options, right? You can go to a bank, which could be interesting, but banks pretty much are only going to lend to companies that are already successful. And the rates you're going to get now in particular, they've gone up significantly. So that may not be as interesting. So if you need capital, access to that is difficult. You're traditionally kind of going to go through friends and family, or, try to go to some venture investors and folks of that nature, which is an interesting channel, but can be extremely time consuming. I know, we as a firm have done that and know how complicated it is. So the option to raise money online, either directly from your customers or from folks that want to invest in your business, is what we add to that mix, right? So instead of needing to work with a large investment bank or go to your local bank to raise capital from them or borrow money from them, you can raise money from your customers. You can raise money from folks and also folks all over the world, which is one of the best things about this, since it's an online portal and online tools that allows anyone anywhere in the world really to be able to invest in this type of product.
Yeah, Jamie, one of the first projects that I was ever involved in doing fundraising on, it was a real estate project. And I think we initially had to raise, about $250,000, I think. And I think it was primarily 10 or so, friends and family that were involved in that. And that was a lot of work to do that, and we did have somebody, I think, that brought in $1 million, and that helped kind of kickstart things a little bit. And then I'm thinking of another project that I was involved in where, we had about 20 different people, that brought in about 5 million. And then those are those are efforts that take a lot of effort. And then also we have crowdsourced funding, right? So I know that being able to pull people together and create a pool of assets that can maybe go and invest in a business is a lot of work. Now, how about liquidity? Is liquidity an issue for companies today?
Well, yeah, of course. So, I mean, it's a two-sided problem, right? So the first part is you want to obviously raise capital, but if you're going to raise capital from smaller investors, they need access to liquidity. They need to be able to buy in, but also exit their position if they need it, because sometimes you need cash, right? You can't just hold an asset forever. And so our technology allows people and companies to be able to buy and sell their shares, creating liquidity, which is, one of the fundamental things that's been lacking from private capital markets to date is the concept of people being able to buy and sell. You're kind of stuck. You buy and you hold. And that's great for really large institutional investors. It's really hard for your Main Street investor that wants to access these products and categories, which have been the best performing historically. So this is something where we're trying to democratize access to these types of products and make it easier to subscribe to them online, make it easier for the company to be able to sell it because we have an online platform in between, and just makes the whole process a lot simpler.
Yeah, I think getting access to the funds and getting access to people, and then being able to have liquidity and getting in and out of it are just some of the two core challenges that people have. Hey, Jamie, we have a chart that your team supplied us that I wanted to throw up, and it talks a little bit to the difference between capital versus IPOs, or private companies versus IPOs. Could you tell us a little bit about this chart and what it kind of represents?
Yeah, absolutely. So what you're seeing here is exactly what I was just describing. As assets become more institutional, it's really, really hard for your Main Street investor to be able to invest in them and to be able to get a decent return on them, right? So if you looked at Apple or Microsoft or Amazon, these are companies that would go public after 2, 3, 4 years of operation. Now companies are staying private longer and longer and longer. And as they extend that staying private phase, what happens is they bring in more and more private capital from institutional investors. And so that means it's not available to you as the average Joe investor. You can't buy into these companies. So while if you had invested in, and I think many of us have read the stories, if you invest $10,000 in Microsoft, in 1988 when it came out, you'd have millions and millions of dollars. Well, that was true for those types of stocks. But in reality, if you'd invested in Google, you would have had a 66x return, which is great. But the private investors had a 447x return. So you are essentially the bag holder at the end of the day for these large institutions that are making all the capital. So what we're trying to do is make it so that companies can go public a little bit earlier using our platform and give more access to the private retail investor.
Okay, so you're providing a framework and an infrastructure that enables people to be able to raise capital and become more liquid, earlier in the process. And so if I get this chart correctly, you're basically saying that in the past, that companies were typically going public more or sooner in the process, and the return to the investors might have been higher. And then now today you're saying that it's taking longer, and some of those early non-institutional investors are not getting as high of a return. Does that capture what you just said?
Yeah, absolutely. I mean, I think I would summarize it this way. Wouldn't you rather have a 4,000x return than a 10x return? That's really what we're talking about.
I think so. I think so. Yeah. All right. Okay. Well, so I think that's enough for this graph, but I think that really captures the idea on what we have there. So let me kind of go to the next piece of this, and I know that people are very interested to know is that what are you really doing to solve this problem? All right. So well, we've also looked at crowdsourced funding, and we've looked at friends and family, and so really we see the problem. All right, it's access to capital and having greater liquidity. What are you doing differently today than what has been done in the past?
Sure. I mean, the biggest differentiator of what we do today is that we create a native digital asset that you can do something with, right? So instead of if you've invested in crowdfunding or something else, you will have signed some paper, and that paper basically is proof that you own it, but you can't do anything with it. You can't send it to somebody, you can't trade it, you can't move it. It's just that piece of paper that says you have it. If the company ever has some sort of exit, you'll get the return on that. In our world, we create a native digital asset that you can hold in a wallet. You could sell to somebody else and send it to them. And you can buy it from other people and directly and receive the asset directly. So that's really the difference. It's sort of making a native digital asset. It's as big a leap as what we've seen going from like snail mail to email, right? So these transitions are huge. And so that's what we're in the middle of right now, is going from what has traditionally been an illiquid paper-based process to a fully digital process with a native digital asset. And in the middle, you had this kind of middle space of, it was a digital process, but then there was no native asset, so you couldn't do anything. And so we're kind of completing the circle, if you will, and making it so now you have a native asset that you can do something with.
So I know people out there are going to have all kinds of questions. And so I wanted to offer to those of you out there, if you have questions, I really encourage you to put them in the box. I'm going to ask a few that I know I asked when we first met. And I know that my viewers out there, are thinking some of this kind of same things now. So if you have a question, throw it in the comment box and we'll try to answer it for you. But the first thing is that you said you create a native digital asset. I'm not certain that everybody would completely understand, what that really means. So rather than you having a paper share, or you hold a share of, a particular investment. All right. You say you create a native digital asset. Can you please expand on that a little bit more so we understand what you're talking about?
Yeah. I mean, so the way I would describe it is, and I've described it many times this way, it kind of helps put it into context. So if everyone's kind of listening to music, you remember you had music on CDs. And so you'd have your CD and you'd press play on your CD player, and supposedly that was digital music, right? But you couldn't do anything with that CD, right? Except for listen to it. Later, along came these pieces of software that would take the song off of the CD and make it into an MP3. Once you had that MP3, you had a native asset. You could put it in your Walkman, you could put it in your disc or your iPod or whatever it may be, and listen to it. You could send it to somebody else via email. There's lots of different things you could do with it. And that's basically what we're doing. We're creating that native digital asset, that MP3, but for financial assets.
Okay. And what it's called, what's that native digital asset called?
It's called a token.
Okay.
Yeah.
And can you please explain to us, what it really means when you say it's a token? So you have, sure. Let's go back to my real estate example. Okay. Yep. So I'm going to, raise funds for a piece of real estate. All right. Yeah. And I come to you and I say, I want to raise equity so that I can go out and procure this piece of real estate. All right. What are you doing from there? Okay. Yeah. So you say you create a token. Help me understand this.
Right. Yeah. So in essence, you could think of it as a share, right? So you're basically creating a share in that real estate that you can sell individually to each person who wants to invest in it. And you can decide how many shares you're going to issue and what they're worth. And so you'd say, I'm going to do 100,000 shares at $1 each, and you sell them to 20 investors and you raise $100,000 on the back of that.
Okay, let's continue this conversation down now. And so you've tokenized something. So it's basically a token on the blockchain, right?
Yep. Yep.
Okay. Now, how is this the same or different than a cryptocurrency?
Sure, no problem. It's a great question. So cryptocurrencies are not backed by actual assets. They're backed by either machines doing work on the internet or something like that. In our world, the token itself is backed by the actual asset, and it gives you rights in real life to the actual asset. So you are, in essence, a holder of rights in that property based on the document that was created and then the token that you've been issued. And those rights are transferable as part of the process of what we do. We make sure that the rights are transferable between different shareholders that meet a certain criteria.
So if I go buy a Bitcoin, for example, or I buy an Ethereum or something, I basically, buy a Bitcoin and I have something that's worth, at that time on the market, something that's around $24,000 or $2,000. And basically the value of that is purely established by the market. I know that, I understand that, but it's like a fiat currency, or it's like a currency that we're exchanging on the open market where the value of it is based on its exchange value solely, right? And it goes up and down purely based on the exchange value, right?
Speculation.
And what I just heard you say is that in this case, you create a token, which is attached to a share of an asset like real estate or like a business. Yep. And so it actually has some other intrinsic or tangible value that's behind it. That's correct?
That's exactly right. That's exactly
okay.
Right.
And how does that change the stability of the asset once that's occurred?
Well, I mean, the asset itself, generally speaking, is going to be based on the valuation of the firm, right? So it's not something where the price of the cryptocurrency is somehow going to affect the price of the asset. They're totally decoupled, right? So the asset itself is the value. Now, many folks will argue that adding liquidity to an asset, so the ability to transfer it, makes it more valuable, right? And so that would be kind of the answer that I would give, is saying, because it's now transferable, it's people are more willing to invest in it. Therefore, there's more liquidity, so it's worth more.
Yeah, Jamie, the reason we were looking at this originally is because our traditional methods of raising equity or capital, for like a real estate project, we're going to go out and we're going to get, an investor or multiple investors to put in, equity for a project. And, at that particular point in time, we're going to sign an agreement and we're each going to get our shares in the agreement, and so that's one way of doing it. But you just brought up that word liquidity. Now, what you've done is you've created a token. So not only do I have my share in that business or that real estate, but I now have this token, which is also trading, on the market, or has the possibility of trading on the market as well, right? And so what was attractive to us was not only do I have this asset, which I own a share of it through the token, but I also now have the possibility of having greater liquidity by trading it. And then the value of that is going to change based on the market value of maybe how successful the performance is of the business or of the real estate. Do I correctly understand that?
Yeah, absolutely.
Yeah, absolutely. So let's go to the next step of this. All right. You brought up the word liquidity. How do you provide greater liquidity to people by using this process?
Yeah. So just a little bit of background about Securitize. We're a SEC registered transfer agent and also a broker dealer that operates a secondary market called an ATS, Alternative Trading System. And we're regulated by FINRA as a broker dealer and the SEC as a transfer agent. And so in that secondary market, we provide a venue where people can put in a limit order and say, I'd like to sell 100 shares for $10, or somebody else can come and say, I'll buy shares for $50. And that order will get matched. It'll instantly clear, and then the money will be transferred from the buyer to the seller, and the shares will be transferred from the seller to the buyer. And so it's a platform that allows you to instantaneously trade these shares. And so our technology enables all of that and automates it. So in the traditional world, if you wanted to sell your shares in a private company, it takes weeks. It requires lawyers. You're going to spend $20,000, $30,000 to do that. In our world, you're going to pay 1% trading fee to process the entire transaction. So it's much more capital efficient.
Jamie, is this a production solution or is it a concept?
Yeah, no, this is production. We're trading millions of dollars on platform today. We count over 450,000 users of the platform. Our primary market and our secondary market are up and running, and everyone's welcome to create an account. It's available to US and international folks. You go to securitize.io, create an account. You can log in and immediately see what's going on.
Fantastic. Yeah, because I think it's important. A lot of times I bring people on that have innovative ideas and we're talking about what we could do, but you're doing this today. 400,000 users, that's amazing.
Yep. Yeah, we have over 1.2 million investors on platform, but 450,000 in the trading venues.
Okay. Hey, listen, I always like to take questions as they come in real time. And I know this isn't 100% in your area, but someone's asking a question about aviation. So let's just bring it up. In your view, what's the most valuable asset that should be tokenized in commercial aviation? So can you kind of abstract that to just an asset which has value? And then maybe we'll talk about where you might apply that to aviation.
Yeah, I mean, what we've seen a lot of is carbon credits. People are trying to tokenize a lot of carbon credits and figure out how to make that, an asset that's liquid and tradable, because there's a lot of new regulation coming in around that. And I know aviation, obviously touches on that because you're using jet fuel. But I think with respect to the planes, what we've seen is different ways of financing the asset, right? And so instead of having to go to, the bank and get a loan at some ridiculous rate, you could go to, United, or somebody could go to their base and say, hey, invest in our jets for us and bring that out as an individual asset. That's what's unique too, is our technology has scale, right? So what would normally be impossible to do, one jet, two jets, whatever it may be, or planes, you can now do using our technology. So we can do offerings, as small as $1 million and as large as, you can imagine. The biggest one we've done as of late has been $75 million with Exodus, but we do plenty of crowdfunding deals and much smaller. So there's a variety of different options in there, and so this just creates a much better mechanism for you to be able to access that capital.
Let me add to that, Jamie, is that, I started out this broadcast by saying that, businesses, whether they be small business, medium-sized businesses, in aviation, we have the opportunity of two main things. We have the opportunity of going to this platform and looking for places to invest,
Yep.
And we have the opportunity of going to this platform to find people that could potentially invest in our business. So, Kamal, you asked, what's the most valuable asset in aviation? Well, it might be your business. It might be an airplane. It might be carbon credits. I've actually seen airplanes. I've seen companies that are actually tokenizing airplanes like as NFTs. And so it's not a brand new idea. And so there's a lot of different ways in aviation that we could consider bringing equity or capital to a situation where we can now make it available to invest or to be able to raise. I mean, does that make sense, Jamie?
Yeah, without a doubt. In fact, we've seen in the music space, which you could compare it in this one, we have a customer who's tokenized song royalties as an NFT, and then but then you can buy shares in that NFT. And then we distribute the royalties based on your position in the NFT.
Oh, that's really creative. I love that. That's a combination of both the NFT and the capital platform. That's amazing. That really is. Okay,
Yep.
Well, good. So let's kind of go to the next thing here. Is that I want for people to a little bit understand your platform and what you're really doing. And we just have a quick picture I wanted to throw up, and it just reminds us of the technology here right now. So could you just sort of describe your platform and just what you've done and what you're doing with it, and just give people an idea? Also, would like for you to address the nature of it being on the blockchain. Just help us understand a little bit of the technology of the solution.
Sure, no problem. So, our platform is really designed for kind of the end-to-end service route of everything you need to do to tokenize an asset, list it on a primary marketplace so you can raise money, and then have it trade on a secondary market, right? So what you're seeing here are some of the screens from our platform where, an investor can come in, they can invest in a product after reading the offering documents and learning about it. They can purchase the shares directly through there in either dollars, or we support USDC, a cryptocurrency as well. And we support credit card, wire, ACH, you name it, like everything you'd want to ever do to invest, we support on that side. And then once you've invested, we give you a portal where you can see how it's performing and also access the secondary market for trading. That's really for the investor, right? For the company that's selling shares is what we call the issuer. So that company will have a portal where they can log in. They can see all of their investors. They can see how much each investor invested. They can see any transfers that are happening, any trades that are going on. And they're able to see, all the information about each one of those investors. And we maintain it up to date. In our world, you have to do a thing called KYC, know your customer, as well as AML checks, anti-money laundering checks. And so our platform does those checks in the background. We keep everything up to date for the company that's issuing the shares. And then we can handle, any sort of transaction, be it a merger or acquisition. If somebody wants to go and list on our secondary market or a different secondary market for trading, or even if you want to go on the NASDAQ, right? So our technology scales all the way from I'm a startup raising my first money to being listed on one of the big boards. And so in the background, what we do with the blockchain is essentially automate compliance. And so your normal firm in our space will have, 20, 30 people working in compliance, managing all the transactions and dealing with all of that. We have 2, right? So we don't need to have that size of scale, even though, you can look at our filings with the SEC and you'll see, we're processing tens of millions of dollars and, thousands and thousands of transactions. And so same type of volume that one of our traditional firms would have, but we've automated it all using the blockchain technology.
Okay, so you've not only provided tokenization, but you've created greater efficiency in the operation and flexibility and functionality as a result of putting it on this kind of a platform, correct?
Yeah, I mean, tokenization is step 1, I would say, and then once you have a native digital asset, you can do stuff with it. And so one of those things is compliance. The other ones, there's a whole bevy of new things that are coming down the line. Just like when you created the MP3, nobody expected that suddenly there'd be TikTok, but without the MP3, you don't have TikTok because you need the music. And so the same thing is happening in our world where we've created this asset. A ton of people can innovate around it and create new functionality and services around it. We're going to start to see lending, borrowing. So maybe you have the digital asset, you put it in, you send it to a smart contract, and then instantly you'll get a loan back. So instead of having to do paperwork and processing, you send this token somewhere, you'll get a loan back. And then once you repay the loan, you'll get your shares back and you have the whole asset again. So there's a lot of innovation coming down the line.
A lot of functionality there. That's very interesting. Yeah. Hey, I have a couple of questions, and if anybody out there has questions, feel free to drop them in the box. I'm happy to answer them for you. But I have 2 thoughts that have come up, from the discussion that you just had. Is that number one, you've a couple of times made reference to secondary markets, is that how does this platform provide greater access when you bring it up in terms of secondary markets? What do you mean by that?
Yeah, sure. So for private assets or shares in your company that you're not listed on a NASDAQ or something like that, you need a place to be able to trade your shares, right? And so a secondary market allows you to buy or sell your shares. And so this is where you're going to create liquidity, right? So the whole concept of liquidity is on one side you have a buyer, on the other side you have a seller. They come together and the transaction gets processed, and that's a secondary market. And so we've been operating a secondary market that's automated and allows you to very easily buy or sell your shares to interested investors.
Now, do you have access directly into some of the traditional cryptocurrency exchanges or markets, or how does that cross over?
Yeah, that's a great question. So the cryptocurrency markets are not regulated, right? So there's no regulator that oversees them. So our business is actually totally separate from that. We are a fully regulated entity like the NASDAQ, whereas a Coinbase or Binance or one of these other firms, they have zero regulation on them because there is no regulator that's in charge of that. So it's a little bit different, and you can't, we don't trade cryptocurrencies on our platform. We only trade securities. And so these are private securities and private firms in a tokenized format, which just eases the entire process.
Okay, so you've talked also a couple times about tokens and how you're tokenizing things. Can you just quickly explain? Is that I understand that it's a security token, all right? And you've already told us that it's not a cryptocurrency. So what really is a security token?
A security token is a representation of the rights in that vehicle, the investment that was created. So it's exactly the same as if you had signed a piece of paper and you had that piece of paper and you wanted to transfer it. Or even like a paper stock certificate would be another thing that's very similar to it. So we're replacing those pieces of paper with digital assets that have the same rights and have the same kind of controls, but allow you to transfer them digitally instead of requiring paper and stamps and FedEx and all sorts of stuff like that.
Yeah. And so I'm going to ask this follow-on question in a second, but because you're a security token, you're also, like you said, regulated by the SEC. And but somebody has a question. I just want to throw it up here real quick because I like to answer them in real time. But here's another quick question from Sean. He says, what blockchain are your tokens and smart contracts built on?
Yeah, no problem. We support a number of different blockchains. We support Ethereum, obviously, Polygon, Algorand, and Avalanche in the public blockchain space, which we're big fans of public blockchains. We also support Hyperledger, Besu, and Quorum in the permissioned world. But to us, if you're doing something in the space, you probably want to be looking at a public blockchain. We think that's a better solution for most.
Okay, so I want to ask this question just to make sure that we understood his question correctly. A lot of times I get people asking, your platform, your security platform, what blockchain is it built on? Is it actually built on top of a specific blockchain, or are you talking about the ability to communicate with those different blockchains?
So I would describe it as a connector. So we basically have our technological platform that has all the functionality, and then there's connectors into each chain in order to be able to interface with them. So you have to be able to interact with Web3 technology, so the next generation of technology, using a lot of Web2 technology, right? So you go to a browser, you can access the interface there, and then when you want to process a transaction, that's when it's hitting the blockchain and everything's getting processed on that end.
Okay. And do I presume that it's using smart contracts in order to be able to do that?
Yes, we use a number of smart contracts. I could describe them really quickly insofar as we have essentially a whitelist that is everybody who's permitted to hold the securities or trade them. And then we have a series of compliance rules on the other side. Those compliance rules can be anything from lockup periods to flow back of securities to investor share limit counts, blacklisted countries, things like that. All that's coded into a separate smart contract. Each one of the customers that comes to us will get their own set of smart contracts that are issued bespoke for them with all the controls just for them.
Okay, those are great questions. Sean, thanks for asking that. I appreciate that. Hey, if anybody else has questions, go ahead and bring them up. I have one more I'm going to throw up there, Jamie. So in the cryptocurrency markets today, in the blockchain markets today, you brought it up a couple of times. There's a lack of regulations in the US. Around the world, there's sometimes more, but they're developing those regulations and they're becoming, more and more. And we know that recently some of the exchanges and things have been addressed by the SEC, and they're trying to decide, how they handle those things. And so it represents risk. All right. And so please explain to our viewers the difference between unregulated, tokens unregulated cryptocurrencies and what you're doing with security tokens and how that mitigates the risk? Because I know that was some of the questions that I had originally.
Yeah, of course. So, in the world of crypto, there is essentially two kind of camps. There's the cowboy camp, which doesn't want the government or any sort of entity to control them and tell them what to do. And so they're unregulated, meaning that there's no oversight. Your money isn't protected in any way, shape, or form. There's no regulations. On any given day, somebody could invent a currency, say it's worth $1 billion, get some people to buy into it, and have a huge Ponzi scheme collapse like we've seen many times happen in the cryptocurrency space, unfortunately. Now, in the security space, you can't do that. You can't behave irrationally. The regulations are pretty clear as to what can be marketed, what can be said, what can be sold, and how it has to be done. And so we have a bunch of policies and procedures to make sure that things are done properly. They follow the rules. They're very similar to the public stock markets, if not almost exactly the same. And, in our world, if we do something wrong, the regulator will fine us. If we do something wrong too many times, we'll lose our license, and then we can't operate anymore. And so, in the security space, it's a whole different game and a whole different business. So while we're both in kind of blockchain, we call it crypto because public blockchain is really crypto. We're not necessarily in the currency game, right? So all of those venues are FX cryptocurrency trading venues, whereas we're really much more of a securities exchange.
So basically, you're a regulated, you're working in a regulated industry providing security tokens, but you're leveraging, the technology that's on blockchain and the growth of the cryptocurrency markets and the interest in the cryptocurrency markets and the liquidity that comes from cryptocurrencies and those concepts. But you're a whole different ballgame because what you're doing is really leveraging those technologies and providing the liquidity and the availability of that kind of an approach to tokenizing of assets. And you're not removing risk, but you're mitigating a lot of the risk as a result of that.
Yeah, we don't have exposure to currency risk in our platform.
Yeah. Okay. Yep. And, whenever we're talking about money and things, I always feel obligated to say that, we're not providing financial advice and, we're just giving information and educational information about Securitize and what they're doing. And I'm not recommending any investments and I'm not recommending you use Securitize. What we're really doing on this broadcast is we're making people aware, all of you out there watching, on all the different technologies that are in use, with respect to blockchain and how they're relating back to aviation, how they're helping us to create efficiencies, how they're helping us to grow. And absolutely, what Securitize is doing today, I can see, is you're providing access to capital and equity markets that maybe are difficult to access, today, maybe for the small company, and you're providing, greater liquidity as a result of that. Those are all really very interesting things. Hey, listen, Jamie, I think we had a really great conversation here today. If somebody wants to continue this conversation with you, what's the best way for them to reach out to Securitize, or what's the next step? Where do they go from here?
Yeah, the best thing to do is we have a great website where you can easily fill out a short form and somebody will get back to you very quickly at securitize.io. The other option, you can email Liam at securitize.io, Liam at securitize.io. And again, it's .io, not .com, for direct response, essentially. So either one of those will work. They both will go through our kind of sales and information organization, and we'll be able to get back to you quickly.
Great, good. Hey, Jamie, one thing I always like to ask people, at the conclusion of some of the live broadcasts we do is, what are you the most excited about in this space? What gets you excited about what's happening today, in technology and things like that?
To me, this, having been in the private investment space for a while, to me, this makes things so much easier and so much better. It's really fundamentally better way of doing things. And so I'm just excited for that kind of future to continue to manifest itself and really scale. We see there's billions of dollars, on chain already with real assets, and we really see that scaling up over the next few years. It's very early with what we're doing. We're probably, 2-3 years into a 10-year cycle. And so it's a really exciting time for us.
Yeah, I couldn't agree with you more. I've been involved in, like I said before, earlier in the broadcast, in raising, capital for different businesses and things. And it's a difficult process. And I'm just really excited about what you're doing and how you're helping, to be able to create success and bringing capital and equity and liquidity, to smaller businesses as well as bigger businesses. And that's really exciting to me. And so I really think what you guys are doing is fantastic. So I wanted to thank you for that.
Yeah, no, thanks so much for the time. I really appreciate it.
Yeah, good. Hey, before I let you go and let the viewers go, I want to just bring up one more slide, just tell people what's coming up is, today we had this tokenization and assets. And so I appreciate you guys watching today and Securitize. And on Wednesday, we have another broadcast on technology and how it's being applied, in the industry for uncrewed traffic management, eVTOLs, unmanned vehicles, things like that. And then Friday, we have another great conversation about how NFTs are being used to be able to provide access to jets. So cryptocurrency, and jets. So we have a great lineup this week, and I wanted to ask all of you to join us again this week. And hey, Jamie, thanks for joining. I can't do this on my own. It's when I bring experts on the broadcast like this, where they share valuable information, that it makes it possible, for us to do this. So thanks for jumping in and helping us learn about what you're doing to help businesses be successful.
Absolutely, my pleasure. Thank you so much for the time.
Great, good. Hey, everybody, fair winds and following seas to you. Thanks for watching our broadcast, and we'll see you again on Wednesday. Bye for now.